Forex market, ladies and gentlemen, back in your life. Thursday morning today, New Zealand Japanese yen is the subject of our program today. We decided that it's time to take action here. For those of you who are quick, you probably remember this is not the first attempt we have on the New Zealand Japanese yen here. We've been here a few days ago. I want to say 4 or 5 days ago. I'm talking about trading days ago. When price action was approaching 84.88, we pulled the trigger. It didn't went well, right? Price action was on its way to break out, but it failed. And of course, then it started to turn around. We quickly went for the exit. Took a small loss on the way out and kept the situation here on the back burner, so to speak. We wanted to keep at least one eye on the situation because I felt that we might get back in, right? So price action did turn around and it went straight to that same 83.60 that was able to push against it last time it was there checking out that area, right? It got the first rejection when it started to turn around for the first time. Then again, a couple of days ago, it landed right at that area and found solid support yet again, right? This is the second time it's this level 83.61 here pushes against price action successfully. So we can call this an official double bottom. Right, I will go beyond and call this a qualified double bottom because of the presence of 83.61, which clearly breaks that negative momentum whenever price action is approaching. I want to show you this from the weekly perspectives, just so you can see that there was really no break below 83.61, even though it looks like it was a little bit here on the daily chart. This is what we call excess noise. Jumping to the weekly chart, as you can see, price action was spiking that area twice. Last week was the first time. This week started on the back foot and now turning around, becoming positive. This is the second time it was spiking that area, right? So there you go, that double bottom, that qualified double bottom. We think this is a strong sign for price action coming back up, this time hopefully finishing up the job, meaning reaching 86.31 at the very minimum. We think, potentially speaking, of course, we think this can go even beyond. This can go all the way to the previous high around 87.30, right, around this area. First, it has to go through 84.88, right, the same obstacle that was in its way last time, a few days ago. This time price action looks like it will approach again, right? I think it's going to happen today. But this time we need price action to actually be successful on the crossover. Only once it begins to cross over and give us that daily breakout confirmation, what we didn't get last time, we're going to be doubling up. Right now, we kind of pulled the trigger with kind of a small size position, 10K. And that's, of course, because, well, again, I think it's a solid case. I think it's a very strong case, bullish case, right? Because of that double bottom I've just mentioned and all that stuff. But again, we need to make sure price action can handle 84.88 as an obnoxious obstacle that it is, right? So once we see that evidence or price action marching forward, crossing that level, we're going to double up and hopefully approach 86.31 with a $20,000 position. That's pretty much the game plan. As far as stop loss level goes, it's right at 83.20. Keep it a healthy distance from price action, of course, hiding below 83.61 for protection. There you go. New Zealand Japanese yen, fresh. Just pull the trigger. Let's see where it takes us. In the meantime, saying goodbye, moving on to the next video. So, see you there.